Good evening. Today is May 12th. And what a day in the markets we had. S&P 500 is down 2.25% or almost 100 points. Nasdaq is down almost 3% or almost 400 points. And Dow Jones is also down almost 2% or 700 points. So everything is down across the board as well as bonds. So if we look at the S&P 500 chart, it was a pretty negative day, and now we're close to the 50-day moving average, and that's where everybody is looking at what's next. And if we look at the history of it, it's previous times when we were that close to 50-day moving average, we undercut it a little bit, and the buyers came in and supported the price, and high we go. Is this going to be the same situation right now? I don't know, but we will have to see and play it as it comes. So I wouldn't be surprised if we have a gap down tomorrow, given that we have closed on the low for the day. And if you look at the intraday chart, we pretty much span the range of 100 points, and it was down all day and closed at the low. So I think tomorrow, if we have a gap down and it holds, I think it's definitely a good buy. But, you know, obviously use your risk management, because the situation, I would say, is rather precarious. If the gap down, if we have one, holds tomorrow, and if it doesn't, it's going to be another nasty day. And because, like I said, the bonds are down and stocks are down, if you look at Victor's daily spec chart, it will be a third day in a row.
Another red day, right?
Right, another red day, which would be a third red day in the row when both stocks and bonds are down. That usually, Victor has tested that, and it usually has some bullish implications going forward in a few days, if I recall correctly.
What's interesting is the degree to which the market reacted to the inflation report, CPI, which CPI has been criticized a lot over the years because it's this sort of price weighted weighted index of prices that are not necessarily all that representative sometimes, but it's sort of supposed to be like consumer basket. But there's a question whether it really does represent that, and so it was the biggest report since in something like 12 years.
1981.
1981. Okay.
The biggest 1 month bump going back to 1981, while headline inflation was that 4.2% from a year ago.
But we've been looking at all these charts for for months. That go back to a daily chart of some of these, and how can corn and soybeans and lumber and all these things be going up, and we don't have really high inflation. We all know that gas prices have gone up, and even gold and silver have been rallying a little bit from a month or so ago. And so we've seen inflation across the board in these commodities and consumer prices like gasoline prices, and so it's sort of a surprise that this was such a surprise, I think. But maybe what the fear is that it will trigger interest rate increases,
right?
If the economic reports are coming in such as that, it'll trigger interest rate increases faster than we'd otherwise get, right? So,
okay. And can you please put your 30-minute charts on with your levels for the option levels?
So I found it interesting that the one thing we were discussing prior to this call is that there's a level that's predicted by this service, which is Spot Gamma, and they predict this level of being a volatility trigger, which above that level, we would expect volatility to decrease, and below it, it becomes more profitable to buy gamma, which means that the volatility should increase below that level. And it's not necessarily that it's going to go down, but that volatility will increase. And just some own measurements that I've done of realized volatility. we've seen that to be true, that maybe not this level exactly, but we're definitely seeing this kind of movement around here versus kind of a grind higher. We haven't had much time above that level to see a grind higher, but these levels, a bunch of these levels were just blown right through. But this volatility trigger level is at about 41.75, and so what this analysis is saying is that if we get back above that level, which is now 125 S&P points above where we are, then we could continue to see a grind higher. But where we are right now, we should expect to see more realized volatility, more actual volatility in the market, bouncing around a lot. And so what that means is if you are an agile trader, then you just take both sides of the trade and play them for 1 day or 2 day moves either way, swings. And whereas above that level, it's better to take more of a trend type position rather than trying to play swings.
Right. We talked about the 41.80 level so many times, and it broke yesterday, but we didn't have the video yesterday, obviously. And that 41.80 level triggered a lot of selling. And so, like you said, if we get above that level, it will be more, again, of a bullish inclination to the market versus right now. I kind of agree. We will probably have lots of back and forth volatility. And the 4,000 level is kind of like they're almost begging to be tested. And it doesn't have to happen tomorrow. It could happen maybe in a few days. But I don't think the sell-off is overall the way as far as the long term goes. But short term, given that we have 3 days in a row of red and the bonds are down, stocks are down, and we have sold off so much in 3 large day of selling off in S&P 500, it's likely we'll have some sort of bounce.
Right. And what's interesting is I think some of the divergences that we're starting to see in the market that even as the market was down big today, there were some let's say financials and oil was up. So there were some energy stocks that were up along with oil today. But then also cryptocurrency, it was down pretty big today. Bitcoin was down.
Nasdaq also had a very deceptive day yesterday where it was bought and there was no follow through today. I was talking about the 13,000 level on Nasdaq, and that's exactly where we are at closing today. So again, to me, that level is very important because Nasdaq has been the leader for the market for a while. And now that we're at that level, it's basically up to Nasdaq. I will be watching Nasdaq and see what we do at this level. Is Arkk ETF going to come in and strongly buy all of those stocks? Is Tesla going to be up tomorrow, next couple of days? Because it's an important level that everybody's watching, after which, if it breaks, it's not going to be small and slow. It may be a dangerous situation.
One of the things I found interesting, so I look at like S&P sectors and so on. So one of the things that I find interesting is that technology has been pretty weak here over the past several weeks. And we're now actually seeing that it's no longer overbought. It was very overbought here just a few weeks ago, and now it's in kind of a neutral range, and timing may even be good to start taking some positions. And so, and just as I'm seeing now, like on Twitter and other forums, people crowing about technology stocks like the ones that Kathy Wood or Arkk invest like to get in because of some kind of disruptive technology, that they're sort of crowing about all of these stocks tanking and so on. So I see it as maybe a good entry in some tech stocks now. and some of these others, like not so favorable, but tech may be a pretty good place to start thinking of looking at new positions.
Right. And do you have the Tesla chart? Because I think you've mentioned before that it wasn't a consolidation. And I think you have mentioned that maybe a week ago or so that it was more of a consolidation, and now it broke down a bit. And what
right down to its
200-day?
Yeah, right down to its 200-day moving average too today. So almost within maybe 5-10 points of its 200-day moving average. So it's it's had quite a drop since February, or late January, early February. 800 down to 880 down to 580.
Right. So it's again also like at a decision point whether the 200-day holds and people buy, or if it breaks, it's a long way down. Lots of CTAs also look at those levels, the 200-day moving average, 50-day moving averages. So they become like self-fulfilling prophecies in a way to many people. And if Tesla, for example, trades below 200-day moving average, lots of strategists that are involved will be selling it now that it's below 200-day moving average. So it's a level to definitely watch. And as far as overall stock market direction, given the negative inflation numbers today, and people are thinking maybe the Fed will raise rates in political situations. So all of that it's going to be affecting the markets.
And but we're seeing similar this. I think the report today caught a lot of people it caught the market by surprise, of course. But I think we're seeing not quite the weakness in some other global markets like FTSE or DAX. So I mean, a little of this was these markets weren't open at the same time that S&P 500 is really tanking, but at the same time they were open when the CPI data came out, and they didn't tank anywhere near as hard. So
perhaps that's something positive. That's something positive for the markets for tomorrow.
Right. It's so it's perceived as being a U.S. now emerging markets were killed today. So it's sort of but other developed markets weren't hit quite as hard.
Mm-hmm. And speaking of Elon Musk, how's Dogecoin doing? Because I feel like Dogecoin pricing is in a way kind of linked to Tesla, regardless of where the market is going. People see Elon as sort of prophet, and whatever he touches turns into gold. So there is this thing that if Dogecoin really crashes back to penny levels, that may negatively affect the Tesla stock valuation or pricing even more, because people lose trust in Elon Musk.
Well, it's I would say that before he started pumping Dogecoin, he was pumping Bitcoin, and he put Bitcoin on his Twitter profile and so on, and that's what has pumped it at least twice, like a couple of these big moves. If you go back, where they were Elon Musk saying that Tesla is buying Bitcoin and so on back here. So I think I've been a little skeptical of Dogecoin. It's sort of like there a lot of people are kind of hold it as a joke. As long as you're not allocating more money than it's sort of fun money, then there's not a problem with it. But it doesn't have the development like a Bitcoin has. But the thing that has happened here over the last few days is there's been a number of what's called Dogecoin imitators, and other coins have launched, like Shiba Inu, which is what the Doge dog is supposed to be, the breed. And so there's one that says launched like Shiba Inu, and it was up something like 20,000% in a week. And but it crashed today because the people that founded that gave something like a million of these tokens to Vitalik Buterin, who is one of the key people founding Ethereum. And he sold it all off today and gave the money to COVID relief in India. And so it was like, $20-30 million or something that he got from that and just donated it to India. And so it crashed it because he had a lot of it. He was given like hundreds of millions of it, but so both selling it as well as the kind of the confidence hit caused it to tank.
Well, Elon Musk tweeted on May 11th, yesterday, a poll whether do you think Tesla should accept Doge as payment for its cars? It was a Twitter poll, and 78% of people said yes. So regardless of what the answers are, this is just yet another attempt by Elon to keep up the price up there for a little longer. But I personally don't think he will succeed. It's
yeah, well, it's the question is, are the people that are buying Dogecoin with $1,000, are they the ones buying Teslas? And I doubt it. But I mean, that's just maybe not yet. I mean, maybe if Dogecoin goes to $5 or something, then they will. But yeah, it's in the end, the ones like Bitcoin, Ethereum. I mean, if these continue to perform well, then Dogecoin will probably hang in there and continue to perform well, or even rally pretty hard because it's got this kind of GameStop mentality, people buying it almost in a spirit of defiance, but also fun. And it's got a community that's pretty strong. That's one of the big drivers of price in crypto is the strength of the community, and Dogecoin has a strong community, really, kind of fun-loving group of people that are pretty tightly knit. And so it's impossible to be like completely against it because you're going against a tight-knit community, and shorting that, it's you're asking for trouble. So I would never short it. I don't have to be long it, but I wouldn't short something like that ever myself. But the thing I've been watching myself is watching Bitcoin a lot, because it's sort of been in this consolidative or pause mode, and ones like Ethereum have been rallying pretty hard and have been sort of levitating up here, and it's interesting to see Bitcoin go nowhere over the past, since mid-April, made a new high, but since then it's just been bouncing around. So I could see Ethereum will have to pause for a while, and then I think Bitcoin will resume leadership. But it could be another few weeks or a month before that happens. But I think that in the end, something like Bitcoin is the gold standard of crypto, and it'll, when it takes leadership, a lot of these things like Dogecoin will suffer when it retakes leadership, I think. But that's the thing that I've been watching in Bitcoin is that, for example, it was, until today, it had made this sort of series of higher lows and higher highs, and now it sort of tapped that same low, and it's right at that low, depending on whether you count the whisker or not. It's maybe it'll bounce a little bit here and make a higher low, and I think that's part of the resumption of the bull trend. Is it's coming off this low in the mid 40,000s, and but right now it's not saying higher low, but it's I could see it bouncing a little bit here, and it's the same thing with.
Mm-hmm. I was going to ask, do you observe this correlation between crypto and stock market? Given that today everything sold off, and given that crypto is supposed to be an inflation hedge somewhat, given that we had this bad inflation numbers, at least on the surface, crypto sold off. So that's, to me, is a little confusing.
It's well, okay. So inflation, in my view, inflation hedges are they are usually also risk assets, right? So that's not like okay. So if you look at some of the commodities that are often considered inflation hedges, like you look at gold, it's off big today, yesterday, and today. $7.5 on gold, less on silver. So silver actually pretty bullish still, in my view. But then something like copper. Here we go, copper. So copper sold off a little bit. It made a new high, but then it sold off from that high.
What about lumber? Has it finally stopped that ascent?
Right. So let's see. So it's sort of, when the CPI report came out, it actually, or was rallying right into that CPI report. So it actually, in my view, may have been predicting this CPI report and then sold off from that level pretty hard. And so in a way, I think it's Bitcoin was behaving today more like, and Ethereum, they were behaving more like risk assets that were selling off along with everything else, risk off, than inflation hedges. And that's pretty typical that if we were to have a real sell-off, then gold would go right down with it. If you look at history, in 2008 or 2009, gold crashed something like right along with the stock market, 40-50%. So I could see that if we had a real sell-off, then I could see that something like that happening with crypto. But then, like we saw in March of 2020, they recovered really well, made new highs, and tripled the old highs. So it's and that's what the inflation hedge was. Is as soon as the volatility calmed down, then they could take back their role as inflation hedges. But these downdrafts tend to be very rapid. I don't know if today was the start of a downdraft. I don't think it was. But if there really is a real sell-off that has to do with some sort of global crisis of some sort, then like let's say what's happening in Israel right now turns into a full-blown war in the Middle East, then and there's things like oil disruption and so on, then that could that could precipitate a real sell-off in the market. But I don't see that necessarily happening. A low risk of it right now. But to answer your question, I think it didn't act like an inflation hedge today. It acted more like a risk asset.
Well, I guess it's buy the rumors, sell the news. All of the commodities and crypto, obviously Ethereum, have all been going up almost parabolic till today's event. So maybe it's the opposite kind of thing, that this kind of breaks that inflation theory for a while, and we'll have at least some pullback in the copper and lumber, etc.
Right. Yeah, we saw a big sell-off in lumber today. That was interesting.
Well, we were saying a few days ago, right, that perhaps it's the inflation thesis has been so much on everybody's mind, and people were putting their money where their mind is and bidding up those assets. And now that the data is finally out and the data is bad, people are selling and taking profits. So yeah. Right.
It's it'll be interesting to see, if there's like some sort of persistent inefficiency that's being introduced in the market, because that is what ends up producing inflation. It did in the 70s, and it could. And so things like what's happening at the Colonial Pipeline, where that was not shut down by the hack. What the hackers did is they took some data, and it's entirely for compliance reasons. that Colonial Pipeline has been shut down.
Mm.
And so it's like the regulations essentially have kept it shut down.
Oh, I didn't realize that.
That's right. And so they've said that they shut it down as a precaution, and then they kept it shut down, and they're waiting to clear all their compliance checks to restart. So, but the hackers only took data, and
well, why then they shut down the pipeline? You could just shut down some parts of it and let the oil flow, or the.
Well, and then you could always just turn the systems to manual, just
right.
shut down
the computerized part.
Right, shut down the ability. I mean, you've got the valves and everything you could turn, but it's a kind of a regulatory issue that they, because of cybersecurity law and so on, they have to go through all of these checks and have the right agencies come and inspect, and so it'll take weeks to completely get it back running again. But that's the sort of thing that introduces inflation, because once,
right,
if it looks like this is some sort of built into the system inefficiency, then people will start to expect higher inflation, more inefficiency, and that's exactly what happened in the 70s, where supply bottlenecks. Oh well, OPEC is probably going to, stay firm on their pricing, things like that, and more inefficiency, less competition. But I don't know. I don't think we're there yet. I think that's what people fear, and that's why you see all these inflation plays doing so well. But if we can get things back a little bit more to normal, then probably the inflation trade will cool off a lot. But at the same time, I don't know. There's reason to believe that it will continue, I think, but we could have a little bit of a pullback in that here over the next few days, and then it just depends on what happens, how things like Colonial Pipeline and so on get resolved.
Right. Well, yeah, thanks for the explanation. It was very interesting. And we also were planning to talk about biotech today, but obviously, given that the market events in the last couple of days, we took all the time to talk about that. So we will postpone the biotech for next week, and we'll see what ideas Andy has next week.
Right. And I think that the timing right now is not that great for biotech. I want to see how things react to how the market reacts to the Regeneron earnings, which appeared to be somewhat negative after hours today, and that could impact some biotech stocks. So I want to watch things a little bit over the next few days, but I'll share some of my key ideas on Monday and ones to look at. The timing is a little bit bad on biotech, but that's often a good place to start accumulating. So if you're for a longer term trade, but I'll point some of those out probably on Monday, and then and we can cover about 5 or 6 different names that will look good. In my view, well, maybe my general commentary on crypto would be that I could see maybe things pulling back a little bit here. It depends on what happens with the stock market, and I may be a little bit less bullish on some of these than I was a few weeks ago. But longer term, I'm still bullish. But but shorter term. Mm-hmm. Yeah, it's interesting how Ethereum looks a lot like a lumber chart, isn't it? But I think that this 4,200 level on Ethereum is really critical. I think that Bitcoin doesn't really have, some sort of key level that I'm watching, except maybe this previous high, which I'd like to see it go back above, and it was about 58,000 that it got to. I'd like to see it close above about 58,000, but right now we're at 52,500, so it would need to rally 10% to really get to that level. So I think with Bitcoin maybe headed down, making a slightly lower low, it makes me less bullish on all of crypto. But if that changes, then it could flip it back to a more neutral stance.
Right, and the 50,000 level on Bitcoin, which is a Soji level, as Victor calls it, do you think that I think that number is so close that it's probably will be revisited and undercut in Bitcoin, or?
Well, I think, yeah, 50,000 is an important level for Bitcoin because right above that level actually is the more important one. So right at where we are right now, 52,500 or 52,000, I think is actually the more critical level because it's where Bitcoin has $1 trillion market cap. And so I think that is what makes it an important psychological level, this idea that, I mean, it's like, right, Bitcoin for a little while was like greater than the market cap for silver and some other things. And if you dollarize the value of all those assets and inventories and so on, and so I think that $1 trillion level is a really important level,
right.
So I do watch it. I think it's right at 52,000, and so it's interesting that we went down to about 52,000 and bounced. But whether it holds that is, I think that's important to hold it, to keep the bullish thesis.
Right. Well, thank you, Andy. Have a good night, and we'll see you all on Friday.
Thank you.